We are very happy to be here. We appreciate you giving us the time.
You are most welcome to Bank of Uganda.
Thank you.
My name is Richard Byarugaba. I'm the Executive Director Finance, and one of my roles is to oversee the administered funds, and one of them is the Agricultural Credit Facility, which is for farmers and anybody involved along the agricultural value chain from the farm to exporting.
Yes.
So all those activities are financed by Agriculture Credit Facility.
We mainly deal with farmers. Our area of focus is the agricultural sector. And we tell farmers to adopt a lot of technologies, to embrace a lot of practices, but it always boils down to money. It is best that we get the facts right, because people always hear, they say, but we hear there is a lot of money in the Bank of Uganda. We hear there is a lot of money where is this money?
So briefly about the Agricultural Credit Facility, this was established by the government of Uganda in 2009, and the major reason was that banks and other financial service providers viewed agriculture as very risky and they didn't want to put money. So the government formed this, put up this fund for farmers to access financing, and the major objective was to promote commercialization of agriculture through provision of short-term, medium and long-term financing to projects engaged in agriculture, green trade, agro-processing, modernization and mechanization. So the government started this with about 30 billion, but because the money was not enough, the decision was to partner with other institutions that are licensed by the Bank of Uganda. The reason is that there was no way of accessing farmers since Bank of Uganda is not spread out in the whole country, and we do not know the borrowers. So then the banks and other financial institutions who hold accounts of individuals and companies involved in farms and could do the credit analysis, the background checks, were given that mandate to do that, to do due diligence on the farmers, credit appraisal, and then they also participate in financing. So the banks finance up to 50%, and then the government tops up with the 50%. So as a simple example, if a borrower is in need of 100 million, the bank where the customer will give them 50 million and the government will give 50 million. Now these loans are given at 12%, okay, which is much cheaper compared to the commercial loans, especially to agriculture, which is more than 20%. And then the other institutions which are smaller, because they do not have a lot of financial mass, they don't have a lot of deposits. We have commercial banks are tier 1, then we have tier 2 for credit institution, tier 3 for MDIs, and now we have tier 3 for large circles. Okay. So for those, the government gives 70% of the loan. And then as an incentive, the interest of 20% on the 100 is taken by the financial institution. The government does not share in the interest. Okay. So that's how it gets cheaper. So it is to motivate farmers to access funding at a lower rate. Cumulatively, we had lent up to 1.2 trillion. Okay. So how it works cumulatively is that I get a loan of 10 million, I pay back, you take a loan, that same loan of 10. So we have lent 20 million out of the 10. So the people have gotten the money, they have gotten 1.2 trillion shillings. From government, we have, from 2009 to date, we have received about 350 billion. But 350 billion, then the commercial banks also contribute almost the similar amount. So that brings us to about 700, but because of revolving, we have done up to more than 1.2 trillion. of loans, which would not have been there if this facility was not in place.
Within the agricultural credit facility,
Yes.
is there space for smallholder farmers? Do
Right.
you segment the kind of farmers? Because
so we do not segment. Thank you for that question. So what we have done for small farmers is because we take them as special because they don't have collateral. The problem has been the traditional collateral. So we developed a product which we call block allocation, and this was developed later, where farmers are grouped together and they can use collateral, which is chattels, but registered as URSB, Uganda Regulation Services Bureau.
Okay.
So it could be a bicycle, it could be TV, it could be chairs, any chattel that is registered, but also we allow Chibanja.
Okay.
Chibanja holders can also borrow. You bring the agreement, maybe LC later. So in a block allocation, the total amount that a group can borrow is 1.5 billion, but each person can only take up to 20 million because of the lack of fallback. So up to 20 million, we do not need land titles and all these complicated things. We can even do it on cash flows, on your integrity, on the information that the bank has on you. So we have seen this as a very successful product among the small farm holders. In places like Eastern Uganda, Northern Uganda, people borrow up to 200,000 shillings to buy pesticide, to buy seeds, those small things, farm implements.
Yes.
So I've seen them partaking in these small loans that would traditionally be difficult for the banks to assess.
Okay.
Yeah.
We have as we talk about investing in the agricultural sector, we have an emerging kind of, I would call it an emerging force.
Yes.
Which is the middle class.
Okay.
Almost everyone is a farmer.
Yes.
But these farmers are also not located they are
On
not
the farm.
able to be on the farm.
They are in offices.
They are in offices, and they are educated.
Okay.
And they will soon retire on the farm. So the challenge is, do we see these people uptaking this kind of facility, or do they have any constraints?
So these people, in Uganda, most of them, possibly land was not expensive. They inherited it. And we see that in agriculture, there's not too much taxation. So what happens, they can afford to be in offices and look after the farms remotely. Because when I'm looking at applications, you find that somebody has a farm, but part of the repayment of cash flows is salary from where they work. So most of them are actually employed. So they supervise these farms on weekends, and maybe when they get time, they are on leave. So they do remote. They call their managers, how are the cows? The veterinary officer goes. So they are not full time, because also you know that the farm may not sustain their lifestyle now.
Yes, sure.
Maybe until they retire. But we see most of them preparing for retirement, having something to do where they're in office, so that when they retire, they go to that. So I've seen most of them are in cattle and chicken, poultry. Cattle, most of them, they do cattle, what we call cattle fattening. So you go to a Chikomera or a market, a cattle market, these ones which are on a particular day in a week or in a month. They buy cows that are not well fed, not looked after. They put them in a place, intensive feeding, fatten them. They buy the cows at about 800,000 to 1 million. They sell at 2 million, 2.5. So most of them are doing that, which doesn't require a lot of their time. When you are doing a dairy farming, you need more time, you need a lot of hygiene, maybe machinery, but things like chicken, pigs, and these cattle for fattening, what you need is a big piece of land, and then maybe fence and monitor.
Yeah.
Some of them put chips so that they can keep monitoring whether the cows are still within the area or they have gone. Others have CCTV on their phones. So you have to to make a way to develop a way of monitoring. Otherwise, if you have 400 kilometers, or people will sell the animals and you don't know. We have had these cases of people who are in Cheyo, they send the money and they don't find a lot. So if you are here, the cows are in Kabare. When you don't monitor, you may not find them.
It gives us a challenge of how do we attract these young people
So
to the sector.
most of the youth actually would go for farming, but they don't have financing. So what we do, we do a lot of awareness to them that they can actually start small and grow big. Everybody starts small. You don't have to start with a square kilometer. You can start with 1 acre and keep expanding. Things like poultry do not need a lot of land. Because you see, the other reason why we do this to support agriculture is food security. Food security is good for national security.
Yes.
Hungry people are very difficult to manage. So we make sure that people have what to eat, especially people in Kampala. They must have food. I think the commercial banks should partner with us because they're operating from here. And they are licensed by us. They should help the government to roll out these programs. So far, we are happy with some banks. Recently, we saw a hike in uptake. There is a lot of uptake. We are now giving out a lot of loans. And yes, for the interest of viewers, we also have a COVID fund, the Small Business Recovery Fund, which is money for activities other than agriculture. So we have businesses like those who are dealing in construction materials, in saloons, in groceries, garages, all types of businesses, hospitals, schools. We have seen a lot of schools taking up this money for renovation, because during COVID the schools were run down, they were not being used, and so there is that money. The maximum amount is 200 million, but we have worked out an arrangement with government to change most of these terms to increase the money to 500 million. The interest rate is 10% per annum, okay, which is again affordable. We use the commercial banks for this, but if somebody tries to frustrate them, they can always contact us, and we see how we can help. This money has not been taken because of the way Ugandans want to behave. We are informal. We don't have records, we don't have bank accounts, so the banks cannot assess your credit worthiness. So keep records, and some people think that when they keep records, the tax authorities will come for them. This is not for tax purposes, it is for helping you to grow your business.
Thank you so much. We really appreciate it.
Okay, thank you, Fists, and this is one way of reaching out to people.
Yes.